All right, guys, so we just went ahead and finished up the trading session for today. It is Friday, it's the end of the week, and man, it was another insane day out there. $44,000 today. Not even sure how much I'm closing up the week. We'll go ahead and take a look at that when we get inside the stew, but I wanted to go ahead and talk just a little bit about something I've really focused on this week and pretty much all of this year. I would say it really started to focus on it 2 weeks back when the market was very range bound, pretty much after that huge drop on the market and we started to trade sideways. There was one thing that you really needed to pay attention to in that price action, and that was not trading in the early chop, right? Not getting stuck trying to get into a trade too early when the market was in that range, right? And I think a lot of people trade the opening range break, right? Matt Diamond, I know, is an OG with the ORB. I know Andy, shout out Andy. I know he's a small fella, but we got to give love to Andy, man. He's a great guy. I watch his videos. I know a lot of people don't, but I do. And then I know a lot of traders trade the ORB, right? Not just those two. There's plenty more to name that I watch online, and I can't stress the importance of it. It really is a very, very quality thing to wait for and to look for and to trade. And so today, again, is a great example of that. There was a very clear range this morning prior to our PCE data. I would think it was PC. Was it PC? No, that was in the pre-market prior to our consumer sentiment and our inflation expectations around 10 a.m. So for the first 30 minutes, the market pretty much ranged. And anyone that's getting antsy and clicky and handsy in those first 30 minutes are just getting totally screwed, right? Finding a way to be patient in those first 30, especially when there's data approaching, it's monumental. It's game-changing. And then after that data came out, we saw a break of the bottom side of the range. We saw a retest of that range, and that's when everything started to fire, right? So to be patient for the first 30, to not just screw yourself up and get totally chopped alive for the first 30 is so important. Now, it's not always that way, right? Sometimes you get those instant off the open moves, straight up, straight down, but regardless if that's the move, that's not even a trade, right? So if you go straight off the open, if you go straight down off the open, that's not a trade. There's no entry point there. There's no thesis there. There's just a guess that we're going to continue, right? So I have focused on not trading until around 10 o'clock almost every day. I might as well just start showing up to the live streams at 10 o'clock because it's not even worth it these days, it seems, right? And even if you start changing in the market, right, where there is setups in that time frame, I don't think I'll ever try to go back to trading those first 30. They're very volatile, very guessy, right? Things can really shift on a dime, and that has been a huge focus of mine this month, last month, pretty much since that big drop, which I think was give or take about a month ago. And so, yeah, that's what I wanted to quickly talk to you guys about. That has been a huge focus for me, a huge thing that I've been focusing on to improve my trading accuracy, right? Not taking too many shots, really, really fine-tuning, A-plus only type mentality. So with that said, let's go ahead and jump back inside. Let's jump onto the stew. Let's break down some of the trades today. They were sick, they were clean, and the end-of-day trade on Tesla, making about 30K, closing the day about 44. That's going to be a good one that you're going to want to see. All right, guys, so what I was talking about in the previous clip about waiting for the opening range to break, I know this is something that a lot of people talk about, and we should all know about it, but actually executing and being patient to wait for it is something I want to show you today and just show you again why it's so important. So here in the pre-market on the ES, we have some very clear pre-market highs around this 57.40 level, and we have some very clear pre-market lows at 57.10. All right, so we created, just an absolutely gorgeous 30-point range on the ES futures to start the day. All right, we have pre-market lows at 57.10. We have pre-market highs at 57.40. So we were approaching the day, right? We were heading into the day within a 30-point range when the bell rang. Now, if we go into the intraday action and we zoom into what happened in the first, let's call it, it's really the first half an hour before the economic data came out, you can see that the market opens, we push lower, we hit pre-market low, we bounce, we go up towards pre-market high, we reject, right? And we move back lower. And so that was really the only thing that happened for the first 30 minutes of the day. You have your range, and your pre-market high, right? You have your pre-market low and pre-market high. And for me to take action, right, I want to see a break and retest below pre-market low, or I want to see a break and retest above pre-market high, right? And then target the next level that may be there. Now, the reason the downside under pre-market low was so interesting and why it was so aggressive is because if we zoom out on the ES, we knew that there really wasn't much below that, right? So under 57.10, and which was also this previous high from last Friday, there really wasn't much until our 56.85 and then our 56.50, which we have clearly just cracked through all of them today. But you can see there was little to no fight at 56.85. There was a fight at our 56.50, but just recently you have broken below that as the market trades, and it's only 12.40. So it's just clearly a big downside day. But where was the key to executing this trade without getting chopped up and losing money in the first 30 minutes, being impatient? It was right here, right? Right there. You guys can see that we had the pre-market low at 57.10. If I zoom in on this, you can see we broke below that level. Right here, we broke below it. Data came out, created a pretty volatile candle right here. It rejected. It started to flow lower, right? And that's when you can say, all right, we are under pre-market low. We're under the opening range. We're looking for a break and retest of that range. I can put my stop loss over that 57.10, and I can target, let's say, the 56.85, which was your next demand on the ES. That is a fantastic risk reward. That's waiting for the opening range to break. That's using the break and retest strategy. That right there is a plus, right? And this was the first trade of the day that we took. If you guys came and watched the live stream today, we were watching that 57.10. This was our SPY put that we took on a retest rejection, stop loss over 57.10. This also perfectly lined up with the 574 level on the S&P 500 ETF. So we had our 574 level on the S&P 500, which was right here. 574 was our opening right around this 574, 574.50. We had that pre-market low, right here. We had our pre-market low, pre-market lows. We had our morning low, right? We had our pre-market high, which was right around this 567, which we never even got close to. That was our range, right? Our opening range was here. And if you go and zoom in on the 2-minute chart, take a look at the break and retest of the morning low, of the pre-market low, and of that morning range, right? Look how beautiful that is. Ignoring this, waiting for a break and retest, bam, 1, 2, 3. Just an absolutely beautiful thing to wait for. So I just wanted to show you today how clean that is, right? I think anyone can look at this chart and say, holy shit, that is clean, right? And it's very clean and it shows up, but the problem is, right, that a lot of traders just cannot help themselves over the first 30 minutes and just get absolutely smacked in here before something actually occurs, which only occurred around 10 o'clock, 10:02, post-economic data. All right, guys, so I just wanted to go ahead and pull up my broker for you. I know we were talking about the week to date. This is this week, $208,000 this week. I can go ahead and click this back to the 24th. We can go each day. 24th made $94,000. That was a big day. 25th made $24,000. 26th, we made 28. The 27th, we went ahead and made 10. And then today, I'm not sure if it includes today. Today, 50K today. Monster day, monster week. I can go ahead and pull up the E-Trade web app. You guys can see right here our month to date, 167. So there was a red week in there. And then year to date, we're up 430,000. So just an absolutely monster year so far. And I really do attribute some of the patience that I've had to only take A-plus setups, to only take those breaks of the morning range and waiting for the break and retest, not getting chopped up in the early session. That was my video yesterday. If you guys watched my video yesterday, I know it wasn't the first 30, but I got chopped up just not waiting for a true setup, right? And I'm going to continue to really focus on not taking shit setups. A-plus only. Break and retest must happen. Markets must align, right? And so that's that. I wanted to now go ahead and talk to you about the Tesla trade that I took today, and it's just absolutely sexy and textbook bear flag break and retest. It's the same thing we talk about every day. There's no difference. Again, I just want to show to you how beautiful looking for this setup is and how it can really change your trading, right? And just really focusing on one thing and one thing only can drastically change your trading. I'm going to go ahead and bring in the VWAP here because it definitely came into play. So we're going to go ahead and show that VWAP for us here. And here we go. So Tesla, why did I take the late day bear flag break and retest? Why was I so confident in it? Well, here is the chart. Let me get this nice and scaled for you. We had a previous major low. Let's delete this for now. We had a previous pretty clear low. I mean, it's right around that 268 level, right? We can see right here, 268 lows, 268 lows. We had a little alfalfa here, but we had some very clear lows here from Wednesday, right? And especially if we go to like the 1 hour chart, you will see this. So here on the 1 hour chart, I think it's even more clean. You can see that 268 was definitely the level that held Tesla higher before it was going to fill this sort of low volume area, right? We can see right here, Tesla had a very low volume area. It went vertically higher. It held 268. It held 268. And so I knew, hey, if we fail back below this Wednesday low and we start to turn this Wednesday low into a rejection point, then we're going to start to sort of flush down, in my opinion, towards that 254, right? And sort of fill this vertically upside move, right? And so if I go to the short-term time frames today, and let me go ahead and delete this. If your charts ever do this, guys, you have to go here and go to Fit Studies. Take that off, right? So today, what happened, right? Let's go to the 5-minute chart. Take a look at this. So we have this morning, 268, 268, right? We drop, we pop, we drop, we attempt to hold 268, which was that same level we just talked about. Now, intraday, you get a flush straight under it. Straight under 268. Bam. Straight down. Now, what does Tesla do from 10:30 to 11:30, 11:45? For almost an hour, Tesla grinds higher to retest the breakdown point, right? So you never chase the breakdown, right? No matter how long it takes for us to crawl our way back to the retest, that is where the trade sets up, right? And so you can see 268, break, hour-long sort of grind higher, shitty grind higher, low volume grind higher, right back into 268, right back into VWAP, and the rest is history, right? You just trust that. You trust that Tesla's going to have a very difficult time to get back over that previous low, to get back over that previous point it rejected. You can see the wick rejection here. You can start to see it happening, right? Wick rejection, tried to pop higher, failed. You can start to see that 268 level and that VWAP starting to be sort of that rejection point that could start to create weakness and could start to get the sellers interested. So you take that entry point, you put a stop over 268, and you target the breakdown to probably low a day, right? That was what I targeted, a low a day move. Basically, this is my risk. This is my reward. And now we can go ahead and pull up TradeZella. You guys can see the statistics of this trade. I put about 100,000 in it, pulled out about 21,000. I think it was a little bit more. I don't think TradeZella has the final exits in here yet. I don't think I updated it since. But if I pull up E-Trade, you can see that the performance on this today was around 22,598. So I think my last exit's not in there yet. But you can see on TradeZella where I took my entries and where I sort of scaled out of this position. So if I draw this out, we can sort of talk about risk reward. We can draw out that horizontal line at 268, which is right there, right? Previous lows, looking for that rejection of 268. We can go ahead and draw out that bear flag. Drawing out that bear flag, we can see that looks just something like this, right? Where we sort of grind higher, we're grinding higher, we're grinding higher, we're grinding higher, back into the retest level, right? And when I started to see that, look where my entry is, right? My entry is very close to where that started to happen. And the reason why that entry is so close to that level, right? It's literally right when I start to see some weakness there, I'm putting something like this, right? Because at that point, my risk reward can look something like this. If I go here and put a short position, right? Here's my risk over 268. My reward is down to low a day, right? So the planned risk reward was 4.89. It was a 5-to-1 risk reward. I ended up probably getting about a 2.5-to-1, 3-to-1, right? Just about. I can drag that up. I got about a 2-to-1 on this. I was happy with the win. I didn't want to mess with the ES low of day. I can show you what happened there. So what happened when Tesla was moving lower was the ES was also trading into this 56.50 demand low. So I was a little worried about maybe that ES bouncing, right, curling off these lows, and me just giving back all those Tesla profits. So I said, you know what, let's grab this. That's a great win. Let's take our 20%. So planned RR, which actually ended up working, risk reward was 4-to-1, 5-to-1, which was beauty, right? And that's just the beauty of the break and retest. That's just the beauty of taking your entry points where the inflection point is, giving you positive risk reward. And if it would have went wrong, we take that L. We accept that that trade didn't work out. But the next time it shows up, right, and we take it and we win, we're going to offset that loss. Here on the running P&L, you guys can see my max drawdown was about 13,000 and my max win was around 30,000. So a good drawdown versus reward situation there. I think I had a good positive risk reward. Had to sit through some drawdown, which is something that, you know, you have to sit through on the break and retest as it's working. We did get a little move higher here, which put me into some drawdown, but does that mean I exit? Hell no, it doesn't mean I exit. I only exit over the 268 break and retest level. That's the invalidation line. So as long as it's underneath that, we stay in the trade. Sometimes we got to sit through some drawdown. And that is the trade that really just puts the cherry on top today. Once again, it was a $44,000 day. Month to date, $167,000. Year to date, $430,000. And that is going to be the end of this week. So hope you guys enjoyed some of the videos this week. A little bit more personal, a little bit more vlog style. I hope you enjoy that. I hope you're enjoying the morning live streams. I hope you're enjoying now us live streaming on WAP with the screen, right? A really fun environment. We have some fun in there. We take some sick trades. Make sure to check that out down below. It's going to say trade live with me. Of course, as always, the Discord voice chat always going live as well. So I hope you guys have enjoyed some of the stuff that I've been able to provide over the last week. And of course, over the last, it's been almost 5 years here on YouTube, my friends. And I appreciate every one of you for stepping up and being supportive and coming back to the live streams. Thank you once again. Have a fantastic weekend. And I will see you next week. Peace out.